Hello everyone, welcome to this week's weekly market view for Monday the 5th of December to Friday the 9th of December 2022. My name is Vishal. Let's get started. Alright then, so let's start with the monthly chart of the Nifty like we always do, and because it is the start of the month, it is good to assess what the market looks like at the start of the month. So in my previous session I did mention that we should be expecting a close above the highs, and what is going to happen right now is this breakout point is going to be a very crucial support for the market. The technical analysis, the traders or the conventional traders treat this as broken resistance becoming support. So this was resistance and now it's becoming support, and there are significant possibilities over here. One possibility is that market can possibly correct back to this 18,600 handle and maybe consolidate here before continuing up, or maybe market decides to close below 18,600 and then we see a little bit of correction in the market. We are at a very crucial level. In fact, yesterday we actually came very close to 18,600 and made a low of 18,639, and then we just bounced a little bit up. The open on Monday is going to be very crucial. So around 18,600 level we should be able to expect to see a bounce coming into the market. If the bounce fails, then the market might even correct a little bit more further. As for the monthly chart, this is your new area of demand, and it's a little far away from current market price, but this is what the monthly chart is telling us right now. So this week is going to be a very critical week for the market, which will decide whether markets want to hold this 18,600 support and continue to move up, or to come down all the way below 18,000 and probably retest the 17,800 handle. Let's look at the weekly chart now. On the weekly chart, we have a close above the all-time high, which is considered to be a little bit of a positive sign, but we did see a little bit of a sell-off coming in the week, but we did manage to close above the 18,600 handle. Now we do have several levels of demand below. We have this one level of demand which is right here, this base rally close to around 17,800, but it will be interesting to see how the market actually reacts very close to this level also, which is more or less the 18,600 handle, right? So maybe we cannot see that level yet on the weekly chart yet, but maybe on the daily chart it will be a little bit more evident. Let's now go to the daily chart, and on the daily chart where we are seeing this breakout taking place, we have a level of demand over here which is from 18,624 to 18,550. We came very close to this level. If you did mark this level wick to wick, then actually you would have already got the entry on this, but in case if you are marking the zone this way, then probably you'll have to wait till we get a little bit of a deeper retracement into the zone. So this level is going to be very crucial. Again, what we are expecting is that if the market comes here, it might consolidate a bit before doing this, or if it moves down, then it can do something like this. So this is also going to be a crucial area for the market, where market can pull back into this level of demand and then move up, or then market can create a new supply zone over here, and if price retraces back, then we might even continue to see a downfall in the market. So let us see what happens in the coming week for the Nifty. If you look at the volatility analysis at the bottom, we had a rise in the premiums. So more or less you can see over here that premiums became very inflated, but usually whenever the premiums become inflated over a period of time, because of the rubber band effect, you also see that premiums have again deflated back here. So this is a usual tendency of the premiums, and we had initiated or planned some kind of non-directional, or let's say even directional debit strategies, and if you participated in those, then probably you would have had some profits or some profit taking over here. So right now volatility is in the lower section, which means that premiums have deflated once again, which means now it's the time to be more on the debit side if you are an options trader, and not on the credit side, because you will not get very high premiums in the current volatility situation. If you look at the intraday chart, let's go to the 5-minute chart to see what's happening. Now, one important observation on the Nifty is that the Nifty has been in a very, very strong uptrend and markets have been gapping up. But this is the very, very first time since the market has actually gapped down in the context of the overall trend of the market. So whenever the market gaps down, this area is going to be a very, very significant area for the market, which means that in due course of time, if the market has to weaken, we should not be seeing a retest of this level. But if the market retests this level and breaks to the upside, then it indicates that there is more demand in the market than supply. So we need to watch out this key level for the coming week, and if the price even gets here, we would expect the price to get in here, let's say somewhere here, and then we might see another fall in the market. If you look at all this area here now, this is all tested. So if this supply zone does play out eventually because of, let's say, some buying pressure coming in the market in a few days, market should not have any hesitation in cutting through this level and going even further down. All right. So let us see what happens in the coming week with a slightly short-term perspective on the Nifty. All right, let's move on to the Bank Nifty now. And if you look at the Bank Nifty chart, let us compare how the indices are doing together. So let's start off with the monthly chart. So this is the monthly candle. We had a very, very good month of November, where the market closed very, very positive on the Bank Nifty. In fact, significantly closed above the all-time high and even closed above the all-time high. So if we compare both the charts between Nifty and Bank Nifty, definitely Bank Nifty is a much, much stronger index at this point in time. The level of demand is from 39,549 to 37,300. This is a longer term level. Let's move on to the weekly chart. On the weekly chart, at the all-time high, we are seeing a level of demand, not a very high quality level of demand, but still qualifies because it's a demand which is more or less created closer to the all-time high. So we could expect in the coming days for Bank Nifty to possibly correct into this area and either consolidate, move up, or either consolidate and move down. So again, just like the Nifty, Bank Nifty is also going to be a crucial area. That if the prices bounce in this area, we might expect to see a continuation in price. But if the price do break this level of demand, then this will give us another shorting opportunity to ride this market all the way down back to this monthly level of demand. So interesting scenario in the market. Let's move on to the daily chart. Let's see what the daily chart is telling us right now. So if you look at the daily chart, it's all been in a very, very consolidated, consolidation phase. We do have some gap levels here, but also something very, very interesting right now is we'll have to just go to a smaller time frame and just assess this area over here. Because if you see this area, this is a gap down, right? So market's in a strong uptrend, but price has pushed the gap down. Prices have been, open gap, gap down. So who's responsible for this gap down, right? It cannot be you and me. It has to be somebody big, right? So what do we expect in case if the market retests this level to fill the gap? Then we would expect the Bank Nifty to start moving down. If that doesn't happen, and if the market decides to continue down further, we might see this happening and maybe this and then a retest over here. So these are the possible scenarios that can happen in the coming week, depending upon how the market opens on Monday. We'll have to reassess the situation. If you look at the premiums, option premiums, just like the Nifty, have also deflated, and they are currently very, very low. So again, not a great idea to get into credit strategies in options on the Nifty. Stick with debit strategies, and if you are a non-directional trader, you can even plan some debit non-directional trades as well. All right. But it's really not a good time to plan any kind of credit strategies, because the premiums are very, very low right now. Okay, let's move on and let's look at Nifty Bank with a slightly intraday perspective. Right, so comparatively, the Bank Nifty has been the stronger of the lot, and just like how we are seeing a gap in the Nifty, we also have a gap in the Bank Nifty. Before that, we also have a very key area of supply here. Although it is tested once, there is a possibility that the market can go all the way up and retest this for the second time. So this supply zone is going to be very crucial in the coming week. And then of course this gap level also. If you can see yesterday, the entire day the market gapped down and remained consolidated, right? So after a period of consolidation, if you look to the left, right, markets are reacting to all this level of demand here. So there is a tendency that if the market holds on to this level of demand, it's going to eventually break the consolidation and move to the upside. If that happens, we might get to see a reaction coming from this area of supply where markets can go or react and start falling down. And then if they start to fall from this area, then there will probably be nothing left here and markets will find a easy path of least resistance to the downside. If the markets do become stronger and they start to move towards the upper level, then this is another scenario that we can see in the making. So these are the two key levels on the Bank Nifty with respect to demand and supply for the upcoming week. Let's now move from the indices towards the currency markets, and let's have a look at USD/INR, because the USD/INR also tells us a lot about what our markets are likely to do. So let's do a little bit of review from the last week. So this is the monthly chart of USD/INR. Like I have mentioned, that this is a key area of demand on the monthly chart. Price comes to this 80.10 handle, we would expect to see a potential bounce coming in the USD/INR, which would ultimately indicate that our market is likely to head down because the USD/INR and the Nifty are inversely correlated. If we look at the weekly chart, the weekly chart is also more or less within the demand here, and as you can clearly see, we had identified a daily supply zone last week, which was this area, and price came into this area and is now reacting. Right now we are in the midst of a consolidation, but if you look at the daily area very carefully, we are more in a sideways market than in a trending market right now in the USD/INR. So now what are the possibilities? The possibilities are the following. In the coming days, we could see the USD/INR being range bound till and until this supply zone holds, or till and until this demand zone holds. If the price eventually breaks this supply, then we might see a rise in the USD/INR, indicating that our market is likely to weaken, which is the Nifty and the Bank Nifty and the Sensex. But if the USD/INR begins to weaken and moves towards 79.94 or let's say the 80 handle, then it's very likely that the Nifty, the Bank Nifty, the Sensex will again start making new highs. So again, the entire week, this is also a good check to just see where the markets are heading. It's a good indicator to tell us what is the direction of the Nifty and the Bank Nifty in the coming week. If we now look at a little bit on the volatility analysis, the USD/INR options are inflated. Right now we are more or less in the expensive area. So trading options in the USD/INR more on the credit side would be making more sense than on the debit side, because the option premiums are expensive. On an intraday perspective, let's look at some key levels on the USD/INR. So this is the 5-minute chart of the USD/INR, and maybe we can go to a slightly higher time frame. Let's go to a 15-minute chart. You'll get something more clearer there. So these are going to be the key levels on the USD/INR for the coming week with an intraday perspective, right? So this is your level of supply, which is this base drop 81.50, and there is any level of demand, it should be somewhere over here. So let's keep a close watch on this rally level of demand and this supply. Right? Anything in the middle, it will just be more of consolidation. So what we would expect to see in the coming week as an intraday trader on the USD/INR, we would expect to see prices moving towards this 81 handle eventually, and then prices moving down. If the price continue to move down, then might hit this level of demand and might start moving. So these are the possible scenarios that we would expect for the market in the coming week. I hope you liked our analysis and enjoyed our analysis on the indices today. If you do like our analysis, please do mention in your comment section. Do like our channel. Do like our videos from time to time. And if you're still not a member of Sharekhan Education channel on YouTube, then do not forget to hit the subscribe button on the channel. So me, Vishal, signing off for this week with more analysis to come for the next week. Hope you enjoyed the analysis. Trade safe, trade well, and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.